why you're unsuccessful as a trader. First mistake that you can make as a new trader is immediately trying to put money into the Forex market. Money is not the most important part of trading. It's not how soon you can fund an account. It's not about how soon you can purchase a prop firm. It's not about losing your prop firm and being able to immediately purchase another one. Money is the least important factor when it comes to. I think that a lot of traders fall victim to scams because they see the money. Some people, when they connect with me, the first thing that they ask me is to see a proof of like payouts or proof of my account, or to see how much money I'm making. Just because someone is making money doesn't mean that they can teach you how to ruffle some feathers. But I noticed that traders who don't know what they're doing pile up in groups. And I'm not saying that there are not any nice groups out there, but the groups that you want to avoid, people who are seeking information. Obviously, if you're joining multiple groups, is something that you are lacking within. There's some people looking for strategies, looking for people to post their charts, looking for trades to copy, looking for strategy, because there's always like a trader or two, and they kind of show their posts and seem to be producing good results for themselves. Now, these people could be following another group and another person, and so now you're clinging on to a complete stranger. Avoid joining multiple groups because it's only going to confuse you. A lot of us are not spending enough time in the market. We have an obligation to the market. If this is going to somehow add income to what you have or replace your income, you have to spend time with it. This one is major. Number 4 is really major. And these are not in order for most important to least important. They are all equally important. A lot of us have gotten our education from the internet, which is fine, YouTube, which is fine. But if you find that you need more, if for whatever reason you're still not producing the results that you need, then it is definitely time for some mentorship. This is something that everyone wants to avoid. A lot of traders would rather put a significant amount of money in the charts and lose it than to pay for someone who's showing the results that they are looking for, who's speaking the language that they're understanding, who has a particular view of the market that they hope to gain in the future, right? And that could be anyone. They'd rather put money in the market than to pay for the services of someone who could help them. Now, what happens when you actually pay for mentorship? Well, you save yourself a lot of time. Now, I'm talking about it could take you 4 years to be successful in the market, but maybe you have a mentor who is really helping you understand what it is that you're seeing in the market, and you shave those 4 years down to 1 year, right? This is something I absolutely hate. I hate strategies. And when I say strategies, I mean like EMA strategies or, whatever. And if I do upload something and it says strategy, it's actually a general understanding of the market, and I'm just showing you guys something, but it's not a get rich quick scheme, because that's what I think strategies are. So when you spend your time, some of you are spending 5 months learning a strategy just to start practicing it and realizing that it totally sucks, and then you're spending another 5 months trying to learn another strategy, or something is working for someone else and then you start to try to adapt that strategy as well. This is called strategy hopping. You want to avoid strategy hopping, guys. It's not about strategies. It's about actually understanding why the market is moving and what you need to do to make money with the market moving. That's all it is. It's not a strategy. There are no strategies. Eliminate strategies and try to understand what is moving the market. Instead, enlighten yourself with things like liquidity, what that is, how it works in the market, and how the market is drawn to these areas. If you can figure out what liquidity is and how to utilize it, you stand to eliminate almost 100 of those BS strategies that are on the market. Now, with number 6, you can actually understand what's going on in the market. You can be a fairly decent trader, but if you lack discipline, then it's going to always leave you back at step 0, not knowing when to get out. Some of us know when to get in. Some of us know what we're looking at, but we don't know when to stop. If you don't know when to stop, guys, you're going to always give the money right back. You can very well understand that, but you have no discipline. In fact, when you exit a winning trade, you get back in. You get back in at the retracement, the market is taking you right back up, putting you into drawdown, and then you lose everything that you got. You have to have discipline when it comes to this. Have structure. What are your trading days? What are your trading hours? How many points, how many pips are you going to aim for per day? And when the heck should you get out? No risk management. Some of you are not trading with a stop loss. Why? Why do you want to go in a negative $4,000 just to recover from that trade when you could have been waiting and actually making money on that movement? No stop loss. You know what the stop loss is there for, guys? To protect your equity. The money that is in your account needs to be protected. It's not going to do it on its own. It needs you to do that for it. So you have to protect the money in your trading account. If you're not going to do that, guys, no one else is going to do that for you. When you have money in your trading account, the goal is to add to it and take as much of a minimal loss as possible. Meaning if you have $100 in your trading account, your risk, your stop loss should not be around 50% of your trading account. That's absurd. This means that if you lose the trade, you're giving the market $50. A lot of you are paying the market, right? You're paying the market instead of being paid because you have a lack of discipline and you don't understand the importance of proper risk management. And guys, this may be one of the most important things. You may fully understand the market, you may understand risk management, but if you have a lack of confidence, you're going to lose in the market anyway. What do I mean by lack of confidence? You have to actually push yourself to take the trades and the setups that you see instead of constantly watching it. Confidence is within. Guys, every day that you get into the market, you have to tell yourself, I got this. This is something that I'm good at, and I'm going to win. Because if you don't have that confidence, guys, you're going to always exit those trades early. You're going to be scared to get in the market, and it's going to cause you to watch your trades play out all the time and always get in at the wrong moments. So guys, I hope that this helps. If you gain any value from this, like and subscribe to this channel, and I'll catch you on the next video.